Hi everyone and welcome back to Grumpy Monkey Trading. My name is Michael and this is another episode of Predictions, this time from July 23rd through the 30th. What's the point of all this? Well, I'm trying to predict the future. Using some stock algorithms, I'm trying to predict a range of options for different stocks. This week we are continuing on with applied optoelectronics as well as Disney, DIS. Okay, let's launch right into optoelectronics. So, I missed on my projection last week. I had it set up nicely to chase 55, and instead, due to a few news reports, it ended out falling down quite a bit, substantially actually. Some analyst reports coming out about potential margin pressure, and then other folks worried about the impact of the Trump tariffs with China. And then all of a sudden, all of our patterns were broken. Resistance was broken and support was broken on the downside. And then away we go down to 41.78. So I'd said that there was a nice cup and handle pattern there, and that was ruined. And now potentially we're in danger of chasing this lower support line at 40, and that has me quite concerned. Now, the stochastics here at the bottom do indicate that a reversal might not be tomorrow, but it should be soon. But it won't be a substantial reversal. You don't just undo this huge bearish engulfing with massive volume candle overnight, unfortunately. So a lot of those patterns were wrecked, and that's some of the danger of technical trading is that even in a nice setup play, you can have stuff like this happen. So what's going to come next week? So next week I see that we're sitting in a really crucial support line, this support area. And if we fall through it, my algorithm didn't predict that there's really a lot separating us from a complete tumble down to 35. So I feel that in the short term, we got a little bit of a bounce back, a little bit of a recovery into the center region here, with our ultimate resistance at the high side being that 50 margin. And I don't think we're going to get back to it anytime soon. In fact, even if everything went perfectly, the algorithm doesn't predict that we could make it back this week. We would struggle across some of these resistance lines, and then we still have the support line to deal with. So mostly for my endpoint, I just don't want to fall below this support line. I do own AAOI, so I definitely don't want to lose any more. And I'm hoping that we can challenge that 50 mark, maybe try and get back to that 55 mark before earnings, which is a point that I would actually consider selling it, and had been my original intention. So what does that look like on the stock itself? So I'll just add that little fluff on there. And we can see here that we have this nice massive plunge. We can see those resistance lines, which if you followed the results show from last week, which there's a link on, these results actually worked out really well. The support and resistance lines are getting marked up extraordinarily well. We had some stocks just bouncing their high and low, striking above and below perfectly. So we have a tough row to hoe really to get back into that 50 region. And I don't expect it to happen. I would be quite comfortable with something in probably the 44 region. And as I mentioned before, just very concerned for a complete drop off because that could take us down into the low 40s, mid 30s, which is not anything that any of us want. All right, on to Disney. Now, Disney took off like a rocket. If you followed my results for that one, I got it perfect, saying that it would challenge for 112 and then make an attempt at 114. And both of those things came true. The actual pattern is setting up nicely for a parabolic move here. You can see that going on with some potential cappers on the upper side. So I think looking at this and knowing that there really isn't much in the way of headway for Disney in terms of news coming out recently, I think it very well could challenge and go back up to 114, and continue on this parabolic pattern. Now, if it did, this is a pretty rapid rise in a short period of time, and I do like my options, so I might start to kind of try and track down what the peak is, and look to either buy a put option because I do really like Disney over the long term, either as a short term buy to capitalize on a downside move or to actually own it and take a little premium. And I'll be looking at that this week. So what do we have in terms of a prediction mark? Now here's kind of some of the lower side of that, 109. For my predictions, I don't have a lot on the downside actually. There's a lot moving towards the upside, so we still need to challenge for that 114 mark. We have some points down here in the 109 area, and that's kind of our body of resistance and our body of support points with some gaps in the middle. People will tell you like this one line or this one area of support is one specific point on the chart or price is as a resistant mark, but it's really more of a cluster of prices, as you can see from this, and it really is a range that you kind of have to work with when you say whether something is breaking up or breaking down. So in this sense, last week it challenged that 114 range. I think it could get back in there, and we can see what that looks like. If it did so, if it did challenge that range, we would be looking up into getting into this region. And you can see here that the algorithm says, you know, if it really took off like a shot, there isn't going to be anything that stops it from going a lot higher. But just realize that those points up in that upper region really are based on starting here and having some of these more extreme values start out just on Monday, and they'll come down accordingly. So with this one, we don't actually have a lot statistically in the way to impact it going up or down as it kind of surfs in some of the mid ranges. And I would just focus on that parabolic move, which I think is pretty relevant. I always like them. I like to watch them go up, and I like to generally trade them down. I don't know why I don't tend to follow them up. Okay, so the summary for AAOI is just hold the line. It really needs to hold that area of support, and if it can, then we should get some sort of recovery, at least in the short term, leading into quarterly results. But if it goes below that line, then we could be in big trouble. And Disney, I think, it can keep chasing. I think it can continue chasing a 114, maybe even higher than that. That is certainly possible. Now, here are some credits. And then now the future, and it's a week forward. I will have a link right here to the week in review, so you can check it out what actually happened if you're looking back on these historically. And here's the disclaimer, which is this is still all in development and certainly not a sure thing, even when I get it more and more correct over time. I did make some improvements over the last one if you look at the results, so you can certainly check out how some of those things change when I tweak pieces in the algorithm. I did not get to the Fibonacci sequence stuff that I wanted to this week because I was mostly focused on bug fixing. I do hope to try and get to it next week, in which case we can add a time element to these videos, and that'll be pretty cool. All right, thank you for watching. If you enjoyed this show, please subscribe. It makes me feel good and gives some traction for giving this show a few legs, and I will see you next week.